So, you've probably heard the buzz about Bitcoin and the massive opportunities shaping up for 2026. But how do you actually get in on the action? Well, in this explainer, we're going to break down one of the most powerful ways to trade, Bitcoin futures. Let's dive right in.
Okay, let's just start with this big number right here, $110,000. That's the average price some experts are predicting for a single Bitcoin in 2026. Now, when you think about today's price hovering around 90,000, that gap, that difference, that's not just a number on a screen. That's a huge potential opportunity.
So that begs the question, right? How can you tap into that potential price swing, whether it skyrockets up or even if it drops, without having to shell out all that cash to buy an actual Bitcoin? It sounds a little complicated, but the answer is actually pretty clever and surprisingly simple.
And that's exactly where Bitcoin futures come into play. So, let's get to the core of it. What in the world are Bitcoin futures? And how do they unlock this opportunity we're talking about?
Think of a futures contract as basically a bet on the future. You're not buying a coin today. Nope. Instead, you're locking in a price now by making an agreement to either buy or sell Bitcoin at that price on a specific date down the road. You're essentially trading on the price movement itself, not the asset. And this is what makes futures so incredibly flexible. If you think the price is going to shoot for the moon, you go long. Simple enough. But here's the really cool part. If you think the price is about to take a dive, you can go short and actually profit from that drop. You've got skin in the game no matter which way the market moves. Now here's where things get really interesting. Let's talk about leverage. Think of it like a financial superpower. It's a tool that lets you control a big position with just a small amount of your own money. For instance, with 10x leverage, your $100 suddenly has the trading power of $1,000. It just amplifies everything. But, and I can't stress this enough, that superpower has a flip side. That amplifier works both ways. Just as fast as it can magnify your wins, it can magnify your losses. A small price move against you can be devastating, so you have to treat leverage with some serious respect. Okay, so you get the concept. Now let's get practical. Before you can do anything, you need to get on the playing field, and that means setting up an account. We're going to walk through the setup on Binance because it's one of the most popular platforms out there. It's really just a simple three-step process. First, you sign up and do the identity verification, the standard stuff. Second, grab the mobile app so you can keep an eye on things. And third, you gotta fund your account. You can send over some Bitcoin or a stable coin like USDT, which is basically just a crypto version of the US dollar. That's it, you're in.
All right, the account is ready. The money's in there. Now for the exciting part, the moment you've been waiting for. Let's actually walk through what it looks like to place your very first trade.
I know a trading screen can look super intimidating at first, but honestly, it just boils down to a few key decisions. First, you pick your pair. BTC USDT just means you're trading Bitcoin against the dollar. Next, you set your leverage. Starting with something like 5x is a smart move. Then you decide how much you want to put in. And finally, you pick an order type. A market order is the easiest. It just buys instantly at whatever the current price is. So let's paint a quick picture. Let's say Bitcoin is sitting at $90,000, and you're thinking it's got legs, it's gonna run to $125,000. This is when you'd open a long position, betting on that rise. This chart here is basically the journey you hope your trade is about to take. Okay, we've talked about all the exciting stuff, the potential gains, but now we have to get serious and talk about the single most important part of this whole game. Winning isn't about being right every time. It's about managing your risk so you can live to trade another day. Pay close attention here. Think of this list as your trading survival kit. A stop loss is your safety net. It automatically gets you out of a bad trade before you lose too much. A take profit is the opposite. It locks in your winnings automatically when you hit your target. And please, practice in demo mode first with fake money. Also, keep an eye on things like funding rates. And of course, stay on top of the news. The market can turn on a dime. And just to be crystal clear about how volatile this world is, for every expert predicting new highs, there's another one pointing to a potential sharp drop, maybe even back down to $50,000 in 2026. This is why you can't just bet on the price going up. You have to be ready for anything. Okay, so let's say you played it smart. Your trade was a winner and you hit your profit target. Awesome! So what now? Well, this is the most satisfying part of the whole process. Actually getting those profits into your hands. And thankfully, the process is really straightforward. Once you close your trade, the profit shows up in your futures wallet. From there, you just transfer it over to your main spot wallet. And once it's there, you can easily convert it to your local currency and send it right to your bank account.
And one last quick but very important piece of housekeeping. Trading profits? Yeah, those are usually taxable. So make sure you know the rules where you live and report your earnings like you're supposed to. So there you have it. We've covered the what, the why, and the how of trading Bitcoin futures for 2026. You've now got the map. But remember, this is a world of high risk and potentially high reward. Your trading journey really does start right now. The only real question left is, are you ready to take that first step?